Most silver traders are focused on charts, technical indicators, and short-term price action. They're watching resistance levels, support zones, and trying to predict what Monday's opening bell might bring. But what if the most important signal isn't on the chart at all? What if a much larger setup is quietly developing beneath the surface, one that has less to do with traders and far more to do with global supply chains, industrial demand, energy markets, government debt, and the growing competition between nations for strategic resources? Because right now, there is a growing conversation among market participants about a potential path toward the $69 level in silver. Whether that target is reached next week, next year, or much later is impossible to know. But the forces that could eventually drive such a move are becoming increasingly difficult to ignore. And that's what we're going to explore today. Not hype, not predictions. Not speculation for the sake of speculation. Instead, we're going to examine the economic, industrial, and geopolitical trends that have many analysts paying closer attention to silver than they have in years. We'll look at supply constraints, rising industrial demand, debt pressures, monetary policy, and the historical patterns that often emerge when multiple macroeconomic forces begin converging at the same time. Because here's what's really happening behind the headlines. Most investors are looking in the wrong place. They're focused on daily market noise while a much larger story is unfolding across mining regions, manufacturing centers, central banks, and government balance sheets around the world. Few people understand the chain reaction that could unfold if existing trends continue. And if silver were ever to approach levels like $69, the journey would likely begin long before the majority of investors realize what's happening. In this video, we'll cover 6 critical insights. First, what's driving the current excitement surrounding silver? Second, the growing challenges facing global silver supply. Third, why industrial demand may become one of the most important stories of this decade. Fourth, what history teaches us about periods of monetary and economic uncertainty. Fifth, why sophisticated investors are paying close attention. And finally, what all of this could mean for ordinary people trying to protect their purchasing power in an increasingly uncertain world. Let's begin. The first thing to understand is that silver occupies a unique position in the global economy. Unlike gold, which is primarily viewed as a monetary asset and store of value, silver lives in 2 worlds simultaneously. It is both a precious metal and an industrial metal. That dual role creates dynamics that many investors underestimate. Here's what most people don't realize. Silver demand is increasingly tied to some of the fastest growing sectors of the global economy. Solar energy installations continue expanding worldwide. Electric vehicles require silver-containing components. Data centers supporting artificial intelligence need vast amounts of electrical infrastructure. Advanced electronics depend on silver's exceptional conductivity. Think of the global economy like a machine. Silver functions as one of the machine's most important electrical components. As nations invest in electrification, digital infrastructure, renewable energy, and advanced manufacturing, demand for that component naturally increases. Yet financial headlines often focus exclusively on interest rates or stock market performance. Meanwhile, a potentially important structural story is developing underneath the surface. And that's why many market observers believe silver deserves far more attention than it's receiving today. If you're interested in understanding the forces shaping precious metals and the global economy, consider subscribing. I post videos like this regularly. Now let's turn to supply, because demand is only half the story. Imagine trying to fill a swimming pool while someone keeps turning off the hose. That's a useful way to think about modern silver production. Many silver mines around the world are dealing with declining ore grades. In simple terms, miners often have to process more rock than they did years ago to extract the same amount of silver. That increases costs. At the same time, energy remains one of the mining industry's largest expenses. Diesel fuel, electricity, transportation, processing equipment, and labor all influence production economics. Countries such as Mexico and Peru remain critical silver producers. China, Russia, Australia, and several Latin American nations also play major roles in global supply. But mining projects require years, sometimes decades, to move from discovery to production. Environmental approvals, financing challenges, infrastructure requirements, and political uncertainty can delay projects significantly. This creates a problem. When demand grows rapidly, supply often struggles to respond quickly. Many commodities experience this challenge. Copper faces similar issues. Nickel has encountered them. Uranium experienced them in recent years. Silver may increasingly face the same reality. And if future demand accelerates while mine supply remains constrained, market participants could find themselves competing for a resource that cannot be expanded overnight. That's one reason why analysts continue monitoring silver inventories, mining investments, and production trends so closely. Because when supply becomes tight, even modest demand increases can have outsized effects on pricing. Now let's talk about the demand side. This is where the story becomes particularly fascinating. Silver's industrial applications continue expanding across multiple sectors simultaneously. Solar energy is perhaps the most obvious example. Modern photovoltaic panels require silver paste to conduct electricity efficiently. As countries pursue renewable energy targets and energy security initiatives, solar installations continue growing. Then there are electric vehicles. Every EV contains significantly more electrical content than traditional vehicles, more wiring, more electronics, more conductive materials, and silver plays an important role throughout that ecosystem. Artificial intelligence introduces another layer. Most people think about AI software, but AI requires physical infrastructure, data centers, networking equipment, power systems, cooling systems, semiconductor manufacturing. All of these rely on electrical components where silver's conductivity provides significant advantages. The defense sector adds additional demand. Advanced communication systems, aerospace technologies, radar equipment, and military electronics frequently incorporate silver. Here's the key takeaway. Silver is not simply a precious metal sitting in vaults. It's a critical industrial material embedded throughout modern civilization. The more the world electrifies, digitizes, and automates, the more relevant silver becomes. And that's why demand forecasts have attracted increasing attention in recent years. If this analysis is helping you connect the dots, subscribe and join our growing community here at Precious Metals Alert. Of course, none of these developments occur in a vacuum. History offers valuable context. History rarely repeats perfectly, but it often rhymes. During the inflationary period of the 1970s, precious metals experienced significant interest as investors sought protection against declining purchasing power. During the 2008 financial crisis, concerns about banking stability and monetary intervention reshaped investor behavior. The COVID era revealed how fragile global supply chains could become when unexpected disruptions occur. Factories closed, transportation slowed, inventories tightened. Commodity markets experienced extraordinary volatility. Energy shocks throughout history have produced similar effects. When energy costs rise sharply, production costs across the economy often follow. That influences everything from mining operations to manufacturing activity. What makes today's environment particularly interesting is the combination of multiple factors occurring simultaneously. Persistent government deficits, elevated debt levels, geopolitical tensions, industrial transformation, energy transition investments, supply chain realignments. Individually, each factor matters. Together, they create a complex environment where traditional assumptions can be challenged. That's why historical perspective remains so valuable. Not because history provides exact answers, but because it helps us recognize patterns that often emerge during periods of economic transition. Now let's discuss why sophisticated investors continue watching precious metals closely. Central banks around the world have spent recent years increasing their gold reserves. This trend reflects broader concerns about diversification, reserve management, and long-term monetary stability. At the same time, global debt levels remain extraordinarily high. Governments face mounting interest expenses. Fiscal deficits continue expanding across many major economies. Currency purchasing power remains a concern for savers worldwide. Institutional investors, family offices, and wealth managers understand a simple principle: risk management matters. No one knows exactly how future economic conditions will unfold. but diversification can help reduce exposure to uncertainty. Many investors are also paying close attention to developments among BRICS nations and other emerging economies. Questions surrounding trade settlement systems, reserve assets, and global monetary arrangements have become increasingly prominent. The US dollar remains the world's dominant reserve currency, yet discussions about alternatives continue gaining visibility. Whenever confidence in financial systems, currencies, or government finances becomes a topic of debate, precious metals often re-enter the conversation, not because they solve every problem, but because they have served as stores of value across centuries of economic change. If you're finding value in these deeper macro insights, consider subscribing because we cover the stories mainstream media often overlooks. So what does all of this mean for ordinary people? That's ultimately the most important question. Because whether you're a trader, investor, retiree, business owner, or simply someone trying to preserve purchasing power, these trends affect real lives. Inflation affects household budgets. Interest rates affect mortgages. Government debt influences future economic policy. Commodity prices impact manufacturing costs and consumer prices. Silver sits at the intersection of many of these forces. No one can predict the future with certainty. No analyst, no economist, no central banker, and certainly no YouTube channel. But understanding the forces at work allows people to prepare rather than react. The goal isn't predicting tomorrow's price. The goal is understanding long-term trends. That means thinking about diversification, managing risk appropriately, maintaining liquidity, avoiding excessive leverage, and focusing on wealth preservation rather than speculation. Markets move in cycles. Periods of optimism are followed by caution. Periods of scarcity are followed by abundance. Successful investors often spend more time studying underlying fundamentals than chasing headlines, and that's particularly true in commodity markets, where supply and demand ultimately determine long-term outcomes. As we wrap up, let's return to the original question. Why are some traders talking about a potential $69 silver setup? The answer isn't a single chart pattern, it isn't one news event, and it certainly isn't one prediction. It's the convergence of multiple forces: growing industrial demand, mining constraints, energy costs, geopolitical uncertainty, rising debt burdens, monetary concerns, and shifting global economic priorities. Whether silver reaches $69 or not is impossible to know. Markets rarely move in straight lines. They experience corrections, volatility, and unexpected developments along the way. But the broader story deserves attention, because the forces influencing silver today extend far beyond the metal itself. They're connected to energy, technology, manufacturing, national security, debt, inflation, and the future direction of the global economy. Markets move in cycles. Headlines come and go. But the laws of supply and demand never disappear. The investors who succeed over the long run are often the ones who pay attention before the crowd arrives. Not because they can predict the future, but because they understand the trends shaping it. Pay attention to the developments most people ignore. Watch the supply side. Watch industrial demand. Watch monetary policy. Watch government debt. And watch how nations respond to an increasingly complex economic landscape. Because sometimes the biggest opportunities emerge long before the crowd notices. If you found this analysis valuable, please like the video, subscribe to Precious Metals Alert, and share it with someone who wants to understand the changing world around us. Until next time, stay informed, stay prepared, and keep your eyes on the metals.